At 8:30 this morning, the government published a number that broke a 15-year pattern, and almost nobody reported the part that matters. The number is 3.70%. That is what the Bureau of Economic Analysis says prices did over the last 12 months, through July. 2 weeks ago, a different government agency published a different number for the same 12 months in the same country, 3.30%. Same year, same prices. Two rulers. 4/10 of a point apart, and the one that came in higher is the one the Federal Reserve picked, the one that is built on purpose to read lower. Here's what that gap costs you at the kitchen table. If you keep $50,000 in a savings account, the higher number says about $1,850 of what it buys quietly went away in the last year. The lower one says $1,650. Nobody mails you the difference, but somebody uses the lower one to decide what your raise is. I am going to walk you all the way to the end of this, and the end is Bitcoin, and I will show you exactly why. But we have to go through the ruler first, because the ruler is the whole reason Bitcoin matters to a saver at all. So, why would a government keep two inflation numbers? It sounds like waste. It is not. It is a choice, and the choice is old, and it is the entire story today. The first ruler is the Consumer Price Index. Call it the shopping list. It picks a basket of things, holds the list still, and asks what that same list costs this year versus last year. The second ruler is the Personal Consumption Expenditures Price Index. Everybody calls it PCE. Call it the shopping cart. It does not hold the list still. Every single month it goes back and reweights itself toward what people actually bought. That difference sounds small. It is not small. It is the reason the second number is usually lower. Here is the plain version. Steak gets expensive. You walk past the steak and buy chicken instead. The shopping list ruler still prices the steak because the list has not changed. The shopping cart ruler follows you over to the chicken and reports that dinner got cheaper. That is called substitution, and it is built in on purpose. The argument for it is honest enough. Nobody keeps buying the expensive thing forever. Real people trade down. A number that ignores that is measuring a life nobody lives. But watch what else it does. It means the official cost of living quietly assumes you will keep finding something cheaper to switch to, forever, every month. In 2000, the Federal Reserve made the shopping cart its official gauge. That is the number the 2% target is measured against. That is the number in the room when they vote on your mortgage rate. And for a quarter century, it has done exactly what you would expect. It has come in lower. I want to hand you the receipt on that, because this is a thing you should be able to check without me. The Cleveland Federal Reserve publishes its own explainer comparing the two. Their sentence, their number. Since 2000, annual CPI inflation has averaged 0.39 percentage points higher than PCE inflation. That is a Federal Reserve Bank saying the Federal Reserve's own gauge runs about 4/10 of a point cool every year, on average. So I checked it the long way. I pulled both indexes and lined up every July against the July before it, matched by date going back 15 years. 14 of the 15, the Fed's number came in below the shopping list number. The average gap? Minus 0.37, almost exactly what Cleveland said. There was one exception in 2023. The Fed's number came in higher by 12 hundredths of a point, a rounding wobble. Blink and you miss it. This morning, it came in higher by 40 hundredths of a point. More than 3 times the only other time it has happened in 16 years, and pointing the opposite way from a 25-year average. That is not a scandal, and I am not going to sell it to you as one. It is something better and something worse. It is a machine telling on itself. Because if the ruler that gets to follow you to the cheaper option is now reading hotter than the ruler that cannot, only one thing explains it. You ran out of cheaper options. Hold on to that, because the proof is in the same release, and it is the part that should stop you. Before I get to it, one thing. I built a 2-minute tool that runs this arithmetic on your real balance instead of my made-up 50,000, and it costs nothing. I will tell you where in a few minutes. Numbers first, because the numbers are the reason it exists. Same report this morning. Here's what Americans did with their money in July. Money spent on goods, meaning things, physical objects. Stuff in a box. That went down. Down 24.6 billion on the big items. The washing machine, the truck. Down 25.3 billion on the everyday things. Groceries, gas, clothes. Call it $50 billion less spent on stuff in a single month. Money spent on services went the other way, up 86.1 billion. A billion is not a number anybody feels. So flip it to a household. It looks like a family that bought no new appliances this year, skipped the truck, trimmed the grocery cart, and still watched more money leave the account than the month before, because the premiums went up anyway. That is not a country that stopped spending. That is a country that stopped buying what it can walk away from and kept paying for what it cannot. Now go back to the ruler, because this is the piece almost nobody connects, and it answers the question I opened with. Why is the Fed's gauge more sensitive to that shift than the shopping list is? Because of what each one counts as your spending. The shopping list ruler measures what leaves your hand at the register, out of pocket, what you paid. The Fed's gauge counts something wider. It counts what gets spent on you, by anybody, on your behalf. Your employer's share of your health insurance premium, Medicare, Medicaid, the part of the medical bill you never touch, never see, and never approve. The Cleveland Fed says this plainly in the same explainer. Healthcare carries a bigger weight in PCE than in CPI, precisely because PCE includes those third-party payments. Housing carries a smaller one. So the Fed's chosen ruler has always been more exposed to exactly one category, the bill somebody else technically pays, which is also, and this is the whole video, the bill you are not allowed to shop around for. And this month, that is where the inflation went. There is the answer. The ruler that gets to follow you to the chicken read hotter than the one that does not, because the price went up in the aisle where there is no chicken. You can switch from steak to chicken. Try switching to a cheaper Medicare. Try calling 3 hospitals for a quote before the ambulance leaves. Try telling your insurer you found a better deal, and see what the policy does in January. Substitution is an escape hatch, and it only works in aisles where you are allowed to walk away. They built the country's main measuring stick on the assumption that you always can. That is also the moment I started measuring my own savings in Bitcoin instead of dollars, and I will come back to why. My macro command center at timtalksfinance.com/members keeps both of this morning's numbers and the live Bitcoin price on one screen, which is how I caught this before lunch. Now, I have seen a number designed to be read one way and behave another way before. Up close. In 2006, I walked into the mortgage business, and the product everybody was excited about advertised 1%. 1% on every flyer. The actual rate on the loan was closer to 10, and the 9 points nobody paid got quietly added on to what the borrower owed every month while he believed he was paying his mortgage down. I asked how that was allowed, and the room looked at me like I was slow. The number was not a lie. 1% really was the payment. It just was not the price. Nobody in that room was a criminal. The paperwork was accurate. And 2 years later, it took the house down anyway. That is what a designed number does. It does not lie to you. It answers a slightly different question than the one you asked, and lets you assume it answered yours. So let me put this morning's release on your kitchen table, with your money on it. Personal income went up in July. $115 billion across the country, about 0.4%. That is a raise. Prices went up 0.2% that same month. On paper, you came out ahead. Now adjust the spending for those prices, which the government does for you in the same report. Spending after inflation was basically flat, less than 0.1%. Read that slowly. You got a raise, prices took part of it, and the amount of actual stuff you brought home did not move. The raise went to the price, not to you, not to more. And here is how the country paid for a flat cart. The savings rate is the share of your take home pay you manage not to spend. In July, it was 3.0%, 3 cents on the dollar. A year ago, July of 2025, it was 4.5%. Turn that into a household. Take home $6,000 a month. At today's rate, you set aside $180 a month. At last year's rate, you set aside $270 a month. You are putting away $90 a month less, a bit over $1,000 a year that used to be yours to keep. Nobody took it. You spent it on the same life. Two honest corrections now, because you deserve them, and because somebody in the comments will have the receipt. First, in June, I told you the savings rate was 2.6% and falling for 6 straight months. This morning, the government revised June down a tenth, and July came in at 3.0. So the 6-month slide ended. 1 month up. I am telling you that myself, rather than letting it sit there, because a number that only ever moves my way is not a number, it is a sales pitch. The 12-month picture did not change. 4.5 down to 3.0. Second, and this one is sharper. Earlier this summer, I read you the Fed's core inflation number for June, 3.29%. This morning, in the same release, they revised June up to 3.34. Nobody announced that. There was no headline. The number I read on this channel that you may have made a decision on got quietly moved after the fact. Revisions are normal and honest, and I would rather have them than not. But sit with the shape of it. The ruler you are measured by can be recut after the measurement. Bitcoin has never had a revision, not one, in 17 years. Hold that thought because it is where this lands. First, the part that costs you money every month for the rest of your life. Your Social Security raise is not calculated off the Fed's gauge. It is calculated off a version of the shopping list one, the cooler one, the 3.3. I made a video in June about them changing how that gets measured, and I am not going to rerun it. This is the other half, and it is simpler and worse. The government uses the lower ruler to decide what to pay you. Its own preferred ruler, the one it trusts enough to set interest rates by, says your costs went up more than that. On a $2,000 a month check, 4/10 of a point is about $96 a year you did not get. Not once. It sets a floor a little too low, and every raise after that is a percentage of a number that was already short. Nobody stole $96 from you. Somebody chose a ruler. And that word, chose, is the door out of this whole thing. Look at what both of these numbers actually are. The shopping list weights get set once a year by one agency. The shopping cart weights get reset every month by another. Both agencies sit inside the government, whose borrowing costs those numbers help determine. I am not telling you those people are dishonest. I have no evidence of that, and I would not say it if I did. I am telling you something duller and much harder to fix. Every ruler you are measured by has a hand on it. The weights are a judgment call. The scope is a judgment call. Whether the money your employer spends on your insurance counts as your spending is a judgment call. Reasonable people made those calls for reasonable reasons, and different people can remake them next year for different reasons. Now widen it out, because it is not just the inflation number. Your savings account pays a rate set by a committee. Your bonds are worth whatever a central bank decides money costs. Your pension assumes a return somebody picked. Your dollars exist in whatever quantity a policy says they should. Your house has a registry, an assessor, and a tax rate, and not one of those three is yours. And every one of them is about to get a digital wrapper. They are tokenizing all of it. Real estate, credit, funds, deposits, treasuries. That is not a theory. It is a build schedule. and it is being poured in public right now. So ask the one question that survives all of it. When everything you own gets reissued on a digital rail, which of those things has nobody who can make more of it? A tokenized bond has an issuer. A tokenized house has a registry. A stablecoin has a company. A digital dollar from a central bank has a central bank. Every single one of them still has a man in the middle who can make more, or reweight it, or revise it after the fact. Exactly the way June's inflation number got revised this morning. Every one of those wrappers is a promise from somebody. Bitcoin is not a promise. Bitcoin is a count. Bitcoin has no man. 21 million. Fixed. Forever. Not a target. Not a guideline. Not a weight that gets updated monthly by an agency. There is no committee that meets to decide what a Bitcoin means this quarter. There is no Bitcoin revision published at 8:30 in the morning that quietly moves last month's number. The Bitcoin supply schedule was written once, 17 years ago, and it has run every 10 minutes since without a single amendment. And Bitcoin has already proved it keeps that schedule. 4 separate times now, on a date anybody could calculate years in advance, Bitcoin cut its own new supply in half exactly as written. No vote, no committee, no revision at 8:30 in the morning. If the agencies that measure your cost of living had that record, you and I would not be having this conversation. That is the entire argument. That is why I keep landing on Bitcoin no matter which door I walk in through. And notice what Bitcoin does not have. Bitcoin does not have two numbers. There is one supply. Every person on Earth reads the same one, and nobody reweights it in the background. You do not have to trust a judgment call to count Bitcoin. You count it yourself, tonight, on a laptop, for free. That is the pay stub move, and it is the only move I have ever really trusted. When a man tells you a number, make the document prove it. With the inflation number, you cannot. The weights are a judgment call you are never shown. With Bitcoin, you can, and the whole setup costs about $150, which is a small computer that sits behind your television and counts all 21 million for you. That is the difference between a number you are given and a number you can verify. Which is why I stopped measuring in dollars. Change the denominator and it changes the equation. Price your house in dollars and it has gone up for 20 years. Price the same house in Bitcoin and it is a completely different picture, and the second picture is the true one. Price your savings account in dollars and the balance is flat, which feels safe. Price it against the life you actually live on the government's own preferred ruler, and it fell 3.7% last year while you did nothing wrong. The balance did not move, the ruler did. That is what Bitcoin is to a saver. Not a trade, not a price target. I am not here to tell you where Bitcoin goes next month, and anybody who does is guessing at you. Bitcoin is a unit nobody gets to reweight while you are asleep. Now let me argue the other side, because you should not take a case from a man who will not argue against himself. Bitcoin moves. Hard. Bitcoin has fallen by half more than once, and Bitcoin will do it again. If a 50% drawdown would force you to sell something you need, then the position size is wrong. That is not an argument against Bitcoin, it is an argument against betting the grocery money on anything. And gold deserves its due here. Gold has no issuer either. And gold has done this job for 4,000 years. I own the argument for gold. What gold does not have is settlement. Gold cannot move at the speed of the internet without a warehouse, a receipt, and a trusted man behind the counter. And the entire lesson of this morning is what happens to numbers that have a trusted man behind them. There is no certainty here, only probabilities. What I can tell you is the direction the probabilities point. And they point at a world where more and more of what you own is issued by somebody, and less of it is not. The store of value pile on this planet, the gold, the bonds, the property, the cash, the equities, runs somewhere around $900 trillion. If even 15 to 20% of that goes looking for something with no issuer over the next couple of decades, and it lands on 21 million Bitcoin, the arithmetic gets very large very fast. Millions per coin large. I am not promising you that. I am telling you it is arithmetic, not prophecy, and you can run it yourself in about 4 minutes. That is the whole invitation. I am one guy with a perspective. Go check my numbers, including the Bitcoin ones, and start with your own. Free, no credit card, about 2 minutes. Take the money quiz at timtalksfinance.com/members. Put in your actual savings balance, not my example, and it will show you what inflation is costing you in dollars per year at both of this morning's numbers. Your net worth next to the macro picture, and one move worth considering for your situation. I built it because I got tired of doing this on a legal pad, and I would rather you did not have to figure it out alone. Here is where I will leave you. For 15 years, the government's preferred ruler came in cooler than the other one. That was normal. That was fine. It happened because you kept finding something cheaper to switch to. This morning, it came in hotter, by the widest margin in the 16 years I could pull, because the price went up in the one place where switching is not an option. The escape hatch inside the measuring stick just closed, which leaves the other kind of escape, the one that is not measured in their units, does not get revised at 8:30 in the morning, and does not have a committee. 21 million Bitcoin. No servers, only a protocol. Nobody picking. 1 plus 1 is definitely 2. That is the only thing I have ever really trusted, and it is why the truth keeps landing on Bitcoin for me, whichever door I walk in through. You do not have to agree with me. Run the numbers yourself and land wherever they take you. I will see you tomorrow.